Today, both Ethereum and XRP are on the rise after President Trump officially opened the door for crypto to be included in 401k retirement plans. Plus, Jordi Alexander from Seleni Capital joins us with a market breakdown after a choppy start to August. Welcome back to Crypto Labs News. Crypto prices are mixed heading into the weekend, even after President Trump signed a new executive order paving the way for alternative assets, including cryptocurrencies, to be added into workplace retirement plans. This order instructs the U.S. Secretary of Labor to review and update fiduciary guidelines for private market investments in 401ks and other defined contribution accounts. It's a big win for private asset managers who have been lobbying for greater access to alternative assets inside retirement accounts during Trump's second term. As of midday Eastern, Bitcoin slipped just over 0.5% but held above $116,000. Ethereum gained nearly 3%, approaching the $4,000 mark, while XRP surged more than 5% after Ripple and the SEC jointly informed the Second Circuit Court of Appeals that both sides are voluntarily withdrawing their appeals over the 2023 case ruling. This effectively ends the legal battle that's been ongoing since 2020, when the SEC first sued Ripple over allegations of selling XRP as an unregistered security. For the week, major cryptocurrencies are all in positive territory. Bitcoin is up about 2.5%, Ethereum has jumped an impressive 12%, and XRP is up nearly 7%. We're also keeping an eye on CleanSpark shares, which are down roughly 7.5% midday despite the company reporting record quarterly revenue from Bitcoin mining. Net income hit $257 million, a massive turnaround from a $236 million loss in the same quarter last year. Now let's dive deeper into the markets. Crypto Labs News spoke with Jordi Alexander from Seleni Capital to get his perspective on what's moving prices right now and what we might see through the rest of the year. He says the recent action in crypto is all about digestion. After weeks of strong rallies in both crypto and related stocks, we're now in a phase where the market needs to pause and consolidate those gains. Bitcoin has repeatedly tested the $110K level and shown real strength, with plenty of buying interest waiting on the sidelines to scoop up dips. That, according to Jordi, is a very constructive sign. Another notable trend: equity markets have stalled in the short term, but both gold and Bitcoin have started climbing again. That's a positive divergence, though crypto is still sensitive to stock market moves because it's treated as a risk asset. When asked about seasonality, Jordi points out that August and September often bring slower action before year-end rallies. The macro environment will still matter, but the fundamentals are improving. He highlighted how the administration has taken steps to actively support the crypto industry, from pushing the SEC and CFTC toward more constructive rules, to now opening the door for crypto in retirement plans. While this change won't instantly move markets, it massively boosts long-term legitimacy. Just as ETFs gave crypto a credibility boost with advisors recommending small allocations, the ability to include it in 401ks could be even more impactful. Over time, broader ownership could make crypto a political and economic priority, just like the S&P 500, which benefits from massive institutional and retail participation. Of course, implementation takes time. Employers, advisors, and plan administrators will need to adjust, and education will be key, but the symbolic value is already huge. Switching to the macro picture, the latest jobs report was weak, which spooked investors, but also fueled hopes for interest rate cuts. Jordi warns that a 25 or even 50 basis point cut might only bring short-lived boosts because rate cuts usually signal a slowing economy. Still, assets like Bitcoin and gold tend to thrive in lower interest rate environments. Looking ahead to the September Fed meeting, he doesn't expect fireworks unless the cut is bigger than expected. A surprise move could weaken the dollar, which would help crypto prices. But the real long-term drivers will be larger players, including countries and sovereign wealth funds, allocating to crypto, something we're already seeing early signs of. As for market rotation, Jordi notes that this is classic behavior. Bitcoin leads, then Ethereum and ETH-linked assets catch up. We're seeing that now even in crypto-related stocks. He sees this as normal digestion before the next big leg higher. In his view, by September, the market could be ready for the next bite of Bitcoin, with Ethereum and other assets benefiting in the meantime. That's all for today's edition of Crypto Labs News.